All right, so this lesson is part 2 to the previous lesson, Fibonacci retracement. In this one, we're going to be talking about the Fibonacci Extension tool. So the Fibonacci retracement, as seen in the previous lesson, measures the pullback, right? The Fibonacci Extension measures the run. So it's the same concept, it's the same numerology, it's the same sequence as mentioned before. Not much changes except that the Fibonacci Extension measures the run. So this is kind of like the full circle coming back together. The Fibonacci retracement measures the pullback, and then at that point we put the Fibonacci extension on top of it, and then we'll figure out the run. So this is really interesting. Let's have a look. Okay, so I'm going to start off with showing you how to set up the Fibonacci extension tool. In one of the previous lessons when we looked at setting up TradingView, I mentioned that you should make sure that you star the Fibonacci extension and the Fibonacci retracement. So make sure you find it. If you didn't find it yet, it's on the left-hand side under the tools. It's called Fibonacci extension. So make sure to select that. And with that said, this is a trend-based Fibonacci extension tool. It's the same on eSignal. It looks like this. I'll show you how to draw it in within price action itself. But just double tap on it or go to the settings. And the main inputs here that I again want you to focus on, again, TradingView might look a little bit different, but I want to make sure that I have 0.618 in there. That's extremely important. I want to make sure that I have 1.0 in there, 1.272, and 1.618. Okay, so let me go over that again. 0.618 is the first input, 1.0 is the second, 1.272 is the third, and 1.618 is the fourth. So when we look at the actual tool itself, let me make this a little bit larger so it's easier to read. There we go. So here we have 0.618, 1.0, 1.272, and 1.618 down below. So this is how it looks like. When we combine them together, first I'm going to measure the Fibonacci retracement, right? So it plots me somewhere over here. Let's measure the pullback here. So price pull is back. Let's do a little bit in real time. And there we have it. So we started to reject this general region, right? So it didn't fully pull back to 0.32, went a little bit farther to reject the weekly 50 EMA at 0.5. The same thing. The one thing that we got to understand is 0.32 is one of the most common levels, but anything between 0.32 and 0.618 is a zone, it's an area. So a lot of times it literally rejects 0.32, but sometimes it can go a little bit higher. Anywhere within this general region, that is still a good rejection of the Fibonacci tool itself, because anything between 0.32 and 0.618, I consider that a zone. So in this case, we rejected the daily 50, 0.5, and in this case, we also have what? Horizontal support and resistance, which is beautiful. 1, 2, 3, 4, 5, 6 rejections. What was one support? Became resistance. So daily 50, 0.5 fib, and horizontal support and resistance with a beautiful high test reversal. So in this case, if you were trading, you would want to be taking a trade somewhere over here, right? But where do you target? I mean, you can target the lows, put your stop loss maybe somewhere above 0.618 because that's the end of the tool. And again, we're going to be focusing on that a little bit more. I'll just place my stop loss right there at 0.75. We're going to be focusing on entries much more in depth when we actually go through this masterclass and end up at the strategy lessons. That is when we're truly going to be focusing on the entries themselves. Check this out. In this case, I'm going to measure the Fibonacci extension. So it starts off this way. You measure it, it's a trend-based Fibonacci extension. So you measure it roughly the same way as you measure the Fibonacci retracement, from the recent high to the recent low. And in this case, there's an extra step, which is the pullback as well. So you measure the pullback. And in this case, it looks something like that. Then we have 0.618 down here. So a good target would be either the recent lows or just above 0.618 Fibonacci extension. Let me make this a little bit larger. There we go. So I'm going to fast forward on this chart and let's see what happens. So we stalled at the lows a little bit, and then more acceleration to the downside, hit 0.618 and rejected it. Target hit, beautiful rejection. So that is the first example that I'll show you with the Fibonacci extension. So in this case, we looked at both the Fibonacci retracement, that was when we were measuring the pullback, and the Fibonacci extension measured the run beautifully here. So that is example number one. Example number two, if you look at the chart here, this is a daily time frame. Right away you can see that I already have this Fibonacci retracement tool drawn in. I'll just delete it, draw it in again from the recent low to the recent high, and gives us 0.32, lines up roughly with the daily 50 EMA. In this case, we have support and resistance, horizontal support and resistance that's a little bit lower roughly in this general region. So we got to understand that this is a little bit of a zone. We can reject anywhere around that daily 50, 0.32, this horizontal level, and maybe even 0.5. This over here is a pretty decent area, a support region. So now let's just wait for deceleration. Let's see what happens. So price is accelerating, slowing down, inside bar, low test. Now I'm interested in a long trade, right? We have deceleration at support. So at some point here, I'll be looking for taking a trade to the upside. I can have my stop maybe below the lows or something like that. We'll dig more into the actual position sizing later in the strategy lessons. But at this point, I want to figure out how far could this potentially go. So that's where the Fibonacci extension tool comes in, because I want to know where the run might end. So Fibonacci extension from the recent low to the recent high. And now it starts to populate. So measure the pullback right here to the previous lows, to the recent lows, I mean the pullback. And now we get our Fibonacci extension of 0.618 is somewhere up there. And a lot of times you got to understand that if you're measuring a larger run, if you think this is potential of going much farther, the next area is typically 1.0, and then 1.272, and then 1.618. So we'll chat even much more about that later in the lessons as well. But typically the safest target would be 0.618, and we're just literally just below it. So let's see how this played out. And now there we have the rejection. And price is rallying to the upside, a little bit of indecision here, pulling back, but eventually it should hit 0.618. There it is. So it's not always that clean. It's not always going to go up in a straight line. I might consolidate a little bit until it pops fully to the upside. But majority of the times, as long as the trend is very strong, which if 0.32 Fibonacci, if that's the pullback to 0.32 Fibonacci, typically that means it's a pretty decent trend, right? Because I had a clear breakout to the upside and then a clear pullback to 0.32. To me, whenever price pulls back to 0.32, that is a perfect pullback. Sometimes it might come a little bit short. To me, that is not a perfect pullback. So if we actually go back over here, right, sometimes we might get a trade or a reversal candlestick before it actually rejects any of the levels. To me, that is not a complete pullback. A complete pullback pulls back to roughly 0.32, you know, so I would want it to reject that level before actually taking a trade to the upside, preferably. Not always, but I would say 95% of the time, I'm waiting for a rejection of 0.32, because to me, that is what a perfect pullback looks like. So that is example number two. Played out beautifully here. Again, we looked at the Fibonacci retracement, measured the Fibonacci extension once I believed the pullback has come to an end. So that is when you measure the Fibonacci extension. It's important to know that the Fibonacci extension is measured when you believe the pullback has come to an end and you're ready to take a trade to the upside. So you're just trying to figure out where to place your target, right? That is where the Fibonacci extension comes in handy. A Fibonacci retracement, you start measuring it when the pullback is beginning, when you know that the pullback now is beginning. So you want to figure out where will it end, where will it stop? That's going to be 0.32, right? So that's how it looks. Let's have a look at one more example. All right, so in this next example, this is one that we already looked at in the previous lesson when we were talking about the Fibonacci retracement. So we have that already drawn in, but let's draw it in one more time. Fibonacci retracement from the recent high to the recent low. And now I'm trying to figure out where the pullback will potentially end, and that is 0.32. So I want to be entering somewhere around this region. In this case, we also have the daily 50 there and a little bit of horizontal support and resistance. Resistance, support, and potentially resistance in this area. So we got a really nice level there. So I want to make sure price action pulls back there. And that is where I want to be focusing on my entry. So right here, we already have that rejection. We have that tweezer top reversal candlestick pattern rejecting this general area. So I want to be taking a trade somewhere short. First target could be the recent low, stop loss. I mean, you can go wide on it, you can go a little bit tighter. Just put it up there for now. And then we'll talk more about the stop losses and position sizing and all of that in the strategy lessons, as I mentioned earlier. But right now we have this rejection. So where will the run go? How far will this run go so I can figure out where to place my target? So that is where the Fibonacci Extension tool comes in. Recent high, okay, that's where we started off. The recent low, measure the pullback, okay, and let's see what happens here. So 0.618 is way down here. So sometimes when we have a very strong trend, in this case, this bearish run was very big, it was very strong, and then we had a really clean pullback to the upside. So in this case, the run will be very strong as well. So 0.618 is actually all the way down here. So this would be my main target as an example, somewhere above 0.618 Fibonacci extension, right? But you got to keep in mind that there's some support here as well, right? So you can see that the previous lows, there's a support area in this general region. So you always have to keep in mind that your support and resistance levels as well. So I want to target roughly over there, but I want to make sure that if price stalls over here, I can react and either take my profit and close the position. So let's see what happens here. Price is exploding to the downside right here. It's starting to slow down at that level. So you can take profit there if you want, but if you wanted to push this farther, let's see what happens. There we go, 0.618 rejected, and you can even see here that now it's rejecting it with a decent reversal candlestick formation. But let's fast forward a little bit more. Let's see what happens. Let's see how far will this go. And check it out. Was once support became resistance. So you can even layer on this now. If you truly wanted to, you can now draw it one more time. I'm going to delete the old Fibonacci extension and draw a new one. And let's just see what happens. So you can see right away that we already had a pullback to 0.618 Fibonacci, right? Right there. And the 20 EMA and some horizontal support and resistance. So will it hit 0.618 as the extension? Well, let's check it out. A little bit of consolidation here. So that's what consolidation looks like. Indecision in the market. Boom. 0.618 hit. And it might even continue farther. So let's see how far it goes. Oh, we get a pullback. And you can just keep on doing this over and over and over again. But right here, you can see again, beautifully, Fibonacci retracement works. Fibonacci extension works perfectly as well to measure the target. Now, the last example I'll show you. All right, so in this last example, I'll show you a chart that we're familiar with. We had a look at this chart already a few times over the past few lessons because it's very clean, it's very simple. So if I just clear everything off here, and I know that a pullback is coming in, so I'm potentially interested. We're trending downwards here, and we just broke this major support and resistance level, right? So I'm just trying to plan this position now. I want to be entering somewhere around this daily 50 EMA, but first I want to figure out where is Fibonacci 0.32 retracement. And there it is. So we have this little bit of a zone. You can see 0.32 is down here. The daily 50 EMA is up there. The support and resistance level is somewhere in this area as well. So we have a good support and resistance region here. What was once support potentially might become resistance. So I want to look for an entry somewhere around this general region for trade to the downside. Let's see what happens. There we go. Inside bar, little rejection, and then a high test reversal. So we have good deceleration. Now at this point, I'm obviously interested in a trade to the downside. Initial target could be the recent low, stop loss, above the highs and maybe above 0.5 since we already have a good rejection. So this is a monthly chart, so this is a long-term swing trade. And let's see what happens. So we continue lower and lower and lower. But I forgot one step. I forgot to measure the extension tool. So never forget that. There it is. So from the recent high to the recent low to the pullback, right? And then where is 0.618? So 0.618 is all the way down there. So the initial target is obviously potentially the recent lows, but the main target could be 0.618, right? Something like that. So if we continue here, we can see that this is the end of the data. This is the moment that I'm actually recording this, so we don't know whether it's actually going to go further. If you're watching this later in time, maybe it already hit 0.618, but this would be my kind of prediction on this. Taking a trade on that rejection, initial target will be the recent lows where it's sitting right now. At this point, we have no idea whether this level will be rejected or not. Why? Because we're still accelerating to the downside. You can see that there's a lot of bearish momentum here. So if it stalls at these previous lows, if it decelerates, gives a bullish reversal candlestick formation like we had over here, an inside bar and this bullish low test. If we get something like this, then this would be a potential time to exit the trade. But if it continues to go farther, then the next target will be 0.618. So that is it for the Fibonacci lessons. The Fibonacci tool, as you guys have seen, is extremely important, from the Fibonacci retracement itself to measure the pullback to the Fibonacci extension to actually measure the run like we have done over the last few examples here. It's something that we're going to be using all the time. So there's going to be many more examples to come in the strategy lessons as well. We're actually going to be focusing even deeper into the Fibonacci retracement tool and the Fibonacci extension tool to measure our stop losses, our entries, and our targets to an even deeper level. And we're also going to be looking at Fibonacci when we look at the Elliott wave lessons. The Elliott wave theory is built around the Fibonacci retracement and the Fibonacci extension. So there's going to be a lot of Fibonacci coming in the next lessons as well. So that is it for now. Ponder on this, think about it a little bit, Google it, Google the Fibonacci number, the Fibonacci sequence, the golden ratio. Also even have a look at Fibonacci in nature. It's very interesting. So have a look at that as your homework for now. But this is it for this lesson, and I'll see you guys in the next one.